Joining us now is Chief Oil Analyst at the Oil Price Information Service, OPIS, Mr. Tom Kloza. We always love seeing you. Bring us some good news, Tom. What do you expect from oil prices here with those record stockpiles?
Well, I think crude oil prices are going to remain in this very narrow range. You know, we're used to crude oil being like the NBA All-Star game with scoring, and it's been more like a European soccer game without all the fans going crazy. So I think we're stuck. I think when you hear people talk about 65 and over, they're talking their books or they're talking their hopes. And I think when you think you talk about people who are $40 and less, that's not going to happen. Now, this is the one-year anniversary of when we saw $26. So we're about 53 to 55. I think we stay there. I think we see a lot more U.S. shale production this year. And as long as Libya and Nigeria continue to throw more out, the pressure is going to be on OPEC. And January was probably as good as it gets for the cartel in terms of adhering to the promises they made in November.
Hey, Tom, it's Kevin Kelly. One of the things I've been seeing in the oil market is that, and you talked about this, we're kind of range-bound. Oil volatility has completely compressed to 26, which is unheard of recently because it's the lowest in 52 weeks. But one of the biggest things we're seeing is that we keep talking about supply. You alluded to Nigeria, and we've even got the shale producers here. I mean, we're exporting 1 million barrels. I mean, that shale producers are increasing on the supply side. Where are we on the demand side? How is that going to impact the price of oil? Because I'm seeing, I mean, we're keep pushing, and I see a cap kind of towards 60, but can demand help make up for that and push us above the 60 level?
Well, there's two stories here. On the global side, there's the notion that demand is rising by about 1.5 million barrels a day. So you've got this big gelatinous belly of crude oil, but, you know, the person is getting taller. Think the New Jersey governor, for example. And the exports, you know, that's like a liposuction where you're taking the exports and moving 1 million barrels overseas. So I do think global demand is up by about 1.5 million barrels a day. In the U.S., gasoline demand has been down by about 5 to 6% so far this year. I think it's just a quirk. I think it's funky. I don't think people drive as much during Eastern Standard Time than during daylight time, and there's a lot more cocooning. But it remains to be seen. If you were analyzing the U.S. demand numbers, not just for gasoline, but for diesel as well, you'd think we were in a recession, and I absolutely don't think that's the case.
Oh, I was going to ask you, do you think that's forecasting something that other people might be missing, including investors in the stock market?
No, I don't think they're missing it, Dagan. I think, you know, we always talk about, well, you need to buy this much gas or whatever, but there are a lot of people right now that are paying 50 or 70 cents more than they did last year. Mm-hmm. And there's almost an internal thermostat that people have for what they pay for gas. I mean, the way they react to gasoline prices is almost comical. So I think that certainly during the winter months, we're driving a little bit less, we're a little bit pulled back in terms of spending. But I suspect that from President's Day on and into the driving season, we'll drive about as much as last year, and gas prices will go up. We think 240 to 250 nationally will be the average. But we think about 6 states, and watch California this week, could go above $3 a gallon.
Wow.
Tom Buck Sexton, do you see anything that the administration's doing having an effect on prices? It may take some time for this to kick in, but they're clearly, at least from everything we see, very fossil fuel friendly. There's going to be drilling, there's going to be pipelines. They seem like they want to get as much of that going as possible, but there's already obviously a lot that's been done as a result of the shale revolution in this country. So do you think that the Trump administration may have an effect on prices?
Well, I think the theme is clearly more rigs, less regs. But if the Republican tax proposals that are in the House, you know, with widespread tax reform, one of the key facets of that is really what amounts to a border tax on everything, including oil. Now, if they do that, and I think it's probably about a 1 in 6 chance or whatever, then the price of oil is going to go up about $10 a barrel, and U.S. gasoline prices will go up 30 cents. Your taxes might go down, certainly as a corporation or as an individual, but if that border tax proposal goes through, the price of oil will break through this range.
Yeah, and that's one of the reasons that even Republican congressmen could very well vote against it, Tom, because politically, how do you stand behind somebody's gas prices going up? You can't do that.
Yeah, you know, it's funny. If it raises the price for toothpicks or for garments, you know, 99% of the shoes are imported, no big deal. But don't mess with my gasoline price. That's what people say.
Yeah, it's why the federal gas tax hasn't gone up since the mid-90s. Tom, it's great to see you. I caught
Nice to see
I
you
caught
guys.
that reference to the New Jersey governor, by the way.